Okay, guys, welcome back. Let's get right into the stock market technical analysis. Real quick, I'm not going to be able to do the Saturday live stream for the private member group this weekend. I've got to go out of town, so heading out to go see a college football game, and so guys won't be there for that. Let's get into the charts, guys. So triple Qs. All right. So we got the Fed coming out tomorrow. And there's, lots that can happen basically, but they're projected to raise rates by 75 basis points. I think that's what we're going for. And the market is, I think that's probably what they're going to do. It's really more about what they say for what's going to happen in the future. And do they start to walk down or talk down their hawkish talk and really start to tell the market they're going to wait and see and things like that. Let me point out what I see in the charts, and then we'll go into some additional Fed talk there and what we see. On the triple Qs, I'm looking at the hourly chart. On the hourly chart, we basically are kind of walking up this. We've got this little trend line right here. Potential bear flag for sure. You've got this kind of flag, and then you're flagging out. And if we drop from where we're at right now, we got to go to the daily to see that. That's going to project that we move down pretty much to the June lows at 269. Okay, so that is a potential for sure. If I go to the hourly chart here, back to the hourly, we do have bullish divergence though. You see the bullish divergence that is continuing to build. So yeah, right there, bullish divergence and walking on this trend line right ahead of the Fed. So I don't know. I think it makes sense from my perspective to probably go into the Fed meeting flat, and that's exactly what I'm doing with really no position in triple Qs. But yeah, there is kind of mixed signals. We are obviously in a bear market. If you go to the daily, you can see the last time we've got this trend line to watch right there, and we're just continuing to move down. So bullish divergence, but we've got a Fed meeting and we're in a downtrend. It really can go either way. Let me point out the SPY. The SPY, we've got this. This is a daily chart, and so here's your June lows. This is kind of the trend line that this rally that we've seen since the June lows has been doing. You can see support, 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 and recently we broke down. These last couple days we've been breaking down. However, if I go to the daily, you'll see that this breakdown has occurred with bullish divergence on the hourly chart here. So we have a break below that key level of support, but it's with divergence, bullish divergence. So I think there's a high probability that this is a bear trap and we're going to get another rally in the markets. Again, I'm just flat. If we rally though and recover this trend line, we could rally up to the downtrend line, which is right about 422-ish. That's coming off the highs on this daily chart. So down, there's your rejection, resistance, and we could rally up to that resistance line again. All right, so in the short term, with the bullish divergence on the hourly, it's really hard to tell. We have to wait for the price action to dictate what's going to happen. If we continue to sell down and we burn through those divergences, that's going to be bearish, and it's going to tell me that we're likely going to kind of crash a little bit. Targets to the downside, if we see the market start to crash because maybe the Fed just comes out super hawkish, would be all the way down here for SPY at about we'll just call it 339, 340. All right, that's your pre-COVID highs right there. All right, I got that marked out. So that would be a target of decent support down there on the SPY. And then the Qs, I've pointed this one out for a long time. I continue to think we're going to hit it. I just don't know if it's going to be right now or maybe after another rally. But the target for triple Qs right down here, about 238, all right, 240. That's your pre-COVID highs. See them right there on the daily chart. So that would be our target down there. Small caps, looking at the daily chart here. Again, this is your rally trend line on the daily. You've got support, support, support. We're below it right now. Right there. However, you go to the hourly chart, you'll see that this breakdown is occurring with bullish divergence on the hourly. So if, that's telling me that we have a potential for a bear trap. Now, if they just smash this thing tomorrow after the Fed, we'll burn through the divergences and we should, kind of get some crash price action. Going to the daily target for this one. This one already hit its pre-COVID lows or highs right there at 170. It's about 171 or so. So we probably, at a minimum, head back down there and probably break down to this 145 area. I see decent support right in there. Okay, so I've given you guys kind of bigger picture downside targets for the broad indices. I've pointed out that we have some divergences, bullish divergences on the shorter time frame, the hourly, and it really just comes out to what do we get out of the Fed, all right? For me, it just makes sense to be flat into the Fed meeting, and I'll just jump on the price action as I see it. If we burn through the divergences on the hourly, that's going to tell me we're bearish. If we, spike up and rally, it's going to tell me we have the potential for, another spike rally out of this meeting. So, okay, let's look at Apple. Apple is kind of interesting. So you'll see here on the daily chart, we've got this downtrend line we've been walking down on the daily. Recently made a divergent low right here. So there it is on the RSI. You've got bullish divergence, not really there on the PPO, but you do have it on the RSI on the daily. When I go down to the hourly chart, you can see we have bullish divergence on both the RSI and the PPO on the hourly. So this was divergent low price action. We did get a rally. Did we break out or did we get rejected at this trend line here? That's kind of the key. So I'll be watching that. Watching these divergences across the board to see, if they want to burn through or if they want to confirm. Okay, so let me wrap up with a couple things. I want to go into the individual trade ideas just to give you guys an update. And then I want to talk about gold, silver, bonds, and the dollar. So we'll start off with these trade ideas. Here's LLY, Eli Lilly. We are short this. I'm staying short right now. Our target still remains this 284 level. The 200-day continues to move up. I think we'll slice right through that and probably at least at a minimum hit this 284 and then probably bounce up and recover that 200-day. That's what I'm looking for. You can see here on this one, again, big negative divergence on the daily right there. We broke trend. So here's your bearish rising wedge. We broke trend and had a sell signal. Backtest one, and that was it. Only really one backtest, and then we've just been chopping sideways. You can see there's a support level that they've been trying to hold this at about 300. We've hit it 3 times already. So one right here, once, twice, 3 times, and you can see the price action. We're pretty weak right now. We're not really bouncing off of that, so I think it's going to break. All right, I'm going to stay short this down to our profit target at 284. This has the likelihood to go a lot lower, but yeah, we should. There's good support back down here at like 284 down to about 280. All right, you can see that support there, or sorry, it was resistance there. It was support right in here. So anywhere down in there is a support zone, and I'll be looking to cover my short. So staying short on that one. Tesla. Let's talk about Tesla. I'm not short this one right now, only because it is. I'm just going flat these growths, kind of these indice plays, and Tesla is pretty much, in my book, very similar to a triple Q's play. On Tesla, we have on the daily chart negative divergence. All right, there it is, right there. It's still there. All right, that has not been negated. So negative divergence on the daily. We've the high right here is about 314. Looks like they're going to pop it. They're, as of right now, they're pretty much making an equal high. So we'll call that another divergent high. They're probably going to pop this just briefly. At least it looks like it. And then overhead, you've got the big resistance line coming off the all-time highs here. You've got resistance, resistance, resistance. So if they want to do a spike after the Fed, they could spike it all the way up here to that 350 area. All right. If it happens soon, it will be a divergent high. It's still a move of about 11% or so, but it could be, they could spike it up there and still keep the divergence. So to me, a very objective shorting opportunity would be up here at the spike into there. Otherwise, you could wait for a break of this trend line right here. All right, so if it breaks that, then that's going to be a sell signal. So from where we're at right now, it just makes sense to probably just go flat. If we get the spike, short it up here. And then, or otherwise, if it breaks the trend line, short it on the breakdown. You short on back testing to resistance or breakdowns of support. All right, and we're just right in there in the middle. Okay, Starbucks. Starbucks, I am staying short personally. Let me show you what I got. All right, on the daily. Negative divergence on the RSI and the PPO right there. So these are that's a divergent high. And last week it really looked, if I can grab the tool, last week it really looked like kind of pumping price action. I just saw Starbucks would just like randomly out of the blue spike straight up and then kind of drift down and then spike straight up. It just looked like someone was in there trying to manipulate that thing. Again, couldn't take out the divergences. They remain. It was just a divergent high. So I'm looking for more downside price action in Starbucks. Really looking for Starbucks to head down to about $80 on a breakdown. Okay, right down there. So we'll watch that for right now. That's kind of the target that I have. And it's a drop from where we're at of about 11% or so. And that's all I got on that one. Just looks like we're going to continue lower. In FSLR, again, guys, negative divergence on the daily chart right there, RSI and PPO. As I zoom in, let's get this lined up here. Zoom in, you can see that, we had this trend line to watch right here on the daily. We broke it, and we've just really been chopping sideways, but not really going up anymore. And today they're selling it down. I think there's more downside to come. Obviously, we make a big red candle here, and just take out these recent lows. It's really going to set this up for that downside move. My target on this is this gap fill at 78. It's a big target. It's going to take a little while, but that's my target. And I'm not going to wait for the exact gap fill. Again, I'll cover if it just enters the gap, gets close. That's where I would cover at. This one's projecting a profit target of about 40% or so. And so I like that. All right, so staying short on that one. Okay, gold. So gold bullion here. Key support. We've had a lot of reactions at this level, 1680. You can see one cluster right in here. There's another one. There's another one right there. So there's several. There's another one right there and another one right there. And zooming in, you can see we're just slightly below it right here. Now but the point is we're below it with bullish divergence on the daily chart. So if we can hold here and spike back above that 1680, this is going to be a bear trap right here. And that's the way I'm leaning. Looks to me like that's probably how it's going to go. Well, we have to wait till the Fed. We start to see that, all these miners should rally pretty strongly. So flipping over to Newmont Mining, which is the largest gold mining company. Look at this. Bullish divergence here on the daily. All right. We have a downtrend line we've been walking down right there. All right. So if you zoom in, you can see we don't have like a buy signal, but we definitely have bullish divergence. The Fed's likely going to trigger a buy signal if it's going to happen. There's also some resistance right here. It's at about 46.50. We start breaking that, you start breaking this downtrend line here and probably pop, it'll probably go like this. You probably pop the downtrend line, hit this first level of resistance, get a little reaction, maybe a consolidation, then continue higher, run up, fill this gap at 50.76. But the point being is that this downtrend will have been broken. The bullish divergence is telling me that's the way it's going to go, but I don't have a buy signal yet. So I'm starting to nibble, just a starter position, front running this a little bit. Obviously, it's higher risk because I don't have that buy signal. So very small position for me, but I think we could get a rally here in gold. And we'll look at Barrick Gold, another one of the large miners. Bullish divergence on the daily. All right, there's a downtrend line to watch right here. And we're pretty much trading right there at resistance today. No buy signals, no breakouts, but we have bullish divergence. So we could get that breakout as early as tomorrow. And no guarantees, no buy signal. So the point that I'm trying to make is gold looks bullish to me. All right. Silver, when I look at silver, same kind of setup. You've got this downtrend line. This is the silver futures, this downtrend line right here. We rallied right into resistance. Could be a bull flag that's playing out. This bull flag would set us up for something like this, and there's your flag, and it would be like a breakout. And it's projecting us up to about the 200-day moving average of 2211, right up in there. So that is how that looks. And see the bullish divergence? This low right here was a divergent low. So it, looks bullish, although we don't have that breakout. So you need to see kind of that big breakout move, and boom, you start breaking out. You're probably going to run up to the 200-day moving average in silver. Okay, what else did I want to cover? The dollar. No gold trade is complete without looking at the dollar. So here's the dollar futures. Daily chart, you have an uptrend line right there on the daily. This goes back to February of this year. Uptrend line. We have negative divergence. It continues to build. This have not been negated on this daily chart. So each new high that the dollar makes is on less and less momentum. And we're just waiting for that breakdown of the trend line to signal the sell signal in the dollar. You see that? Clearly put, you see the breakdown in the dollar. You see the breakouts in gold, and a recovery of that 680 level in gold, and it just is going to help confirm that the gold miners and this gold trade to the long side is really going to work out. So look for the dollar to break down. We don't have that sell signal yet. Okay, and bonds. Let's look at TLT. All right, so TLT, you can see, let me kind of clear this up. TLT has made a new low today, which means interest rates are spiking higher today. On the daily, we just kind of briefly made a new low. We have bullish divergence, though, on both momentum indicators. You can see the PPO. Let me zoom in on that. Starting to kind of flatline. It looks like it's going to turn up and help confirm that divergence. So we have a divergent low in bonds, which tells me that we could break to the upside in bonds, meaning interest rates would fall. Now, what does that mean? Does the market fall and everyone, crash and everyone's running to bonds for safety and maybe running to gold for safety? That might be, all right? So we'll keep an eye on that. But I do see the potential for bonds, TLT, to rally here into, basically to get a rally. So that is it. Oh, one more thing. Netflix, NFLX. We'll cover this. Just a trade setup, not really actionable, but it might play out tomorrow. So on Netflix, you've got this gap. This was the big gap from earnings, I believe. It gapped down basically to about 249, and continued to trade lower. But we started to build bullish divergence on the daily charts. We have big bullish divergence on the daily, and we've started to uptrend. We're starting to move higher. We're right at the gap again, at least today we were, and you can see there it is. Gap. All right, we hit it once briefly a couple months ago or whatever, and then sold off, and we're right back at it. So kind of knocking at the ceiling for this. If we get a spike from the Fed tomorrow, Netflix could spike all the way up and do this gap fill. All right, up here at 328.65 would be the target. You got the 200-day, but I suspect it'll be a strong, quick momentum play and go like that, overshoot the 200, and then, and from there probably pull back. But could be a potential trade there. If I start to see this thing spiking into the gap, it's likely going to continue and run up and fill that gap. So there's a trade setup, not actionable yet. I'm not jumping in, but it could be something that triggers right after the Fed tomorrow, so we'll keep an eye on that. All right, guys, that's all I got. If you're interested in taking the course, link in the description below. I break down, how to read the charts, how to find trade setups, how to, take good risk-reward trades. That's all in the course. Also, the private membership group is available. I go through additional trade ideas. I give you my market insights, and I typically do the Saturday live streams where you can bring your charts to me, and I'll analyze them and give you guys my thoughts. Again, no Saturday live stream this week, but we'll resume those next weekend. So that's all I got, guys. Take care.